Specialization means more for 51% of Foremost mobile home customers. What can Foremost mean for your agency? Find out at foremostagent.com.
Graeme Newman, Marketing Director at CFC Underwriting in London, says carriers are working on addressing the exposures created by privacy and security breaches, but insureds still see these policies lacking when it comes to how a breach can affect their business long term. In this video with mynewmarkets.com editor Amy O'Connor, Newman discusses how insureds and the industry are reacting to the emerging area of reputational risk insurance.
I think the expectations of our customers, so the end insureds, is always totally different to what the insurance product is actually there to provide. And over time, the two things get closer and closer together. But if you take something like cyber insurance, and in particular the area of privacy, what I was hearing a lot from clients was that they didn't worry so much about the initial data being lost and maybe the direct financial cost to themselves. What they cared about was the loss of their reputation. And what they would say is, well, the loss that we would sustain from a data loss financially might be this much, but the cost of our reputation is this much. So why would I buy a policy if it only covers me for this part of my overall risk? And that's why we started to look at how could we insure reputational risk. And it's only over time and as we develop a dialogue between our customers and our brokers that we get to understand what it is that the customer really wants. But they also have to have realistic expectations on insurers. So if you take an area like full technology failure, so when a client's systems go down and they buy a cyber policy, they'll generally expect the policy to respond, even if that was as a result of a bodged systems upgrade or a bug in the code. Whereas the insurance market right now is more prepared to offer them cover if there was a computer virus or a hack attack. And that's where the two people are poles apart. But we're slowly but surely trying to find ways to bridge that gap and bring the two things closer together.
Newman says because insureds are so concerned about how new technologies can impact their reputations going forward, insurance companies are starting to focus new products on this serious risk.
So reputational risk, I think by the insurance industry, is classified as an emerging risk, but let's face it, it's been a risk that businesses have had for centuries. How we react to that and how we manage that is an emerging area of insurance, and we're seeing lots of insurance carriers now putting extra thought into how they can do that. It's very, very difficult to insure someone's reputation. What is someone's reputation worth? Traditionally, people have tried to ensure that by providing them with cover for PR costs or support with marketing or crisis management consultants, but really that's a thin, sticky plaster on their reputation. What we're seeing now is people really trying to tackle that. They're looking at how can we ensure that the loss of future sales or the loss of revenue from future sales that have disappeared as a result of a damage to their reputation. At CFC, we recently launched a brand new cyber product that was designed to address exactly that issue. So we saw clients worrying about the damage to their reputation that they would experience if they had a hack attack, and customers no longer trusted them and wouldn't shop with them anymore. So the traditional policies only cover the direct financial loss, but the new policies are now looking to cover them for the loss of future sales. So I think it's definitely an emerging area of insurance. I think it's going to be a very big area of insurance in the next 5 to 10 years. It's just how we go about assessing that, quantifying it and paying for those damages. So that's the challenge.